Hello and welcome. You are watching First Take here on News 9 Live. A very warm welcome to all those who've joined us in this broadcast this morning. I'm Krishna Kumar and we are taking you through how the Indian stock markets have opened for trading this morning. Sensex and the Nifty, bear in mind, opening this morning after inflation data came out last evening. And there you go, morning mood check. Nifty and the Sensex opening flat to negative in the red, marginally in the red. Nifty down about 0.1% and Nifty Sensex down about 0.16%. But bear in mind, Nifty at 2885, still close to the 21k peak it scaled recently. Sensex also around 400 points, 370 points odd, down this morning at 69,637. Again, close by to that 70k peak it scaled recently. So Nifty and the Sensex opening in negative red territory, but bear in mind this is a flat open, flat to negative open. It's not exactly a completely down opening for the Indian stock markets this morning. We'll have to see how trading progresses over the course of the day, but let's also take a look at the Nifty mid cap and the small cap. If we'll have a look at that, as always, no matter what happens to the Nifty and the Sensex, the mid-cap index and the small-cap index in the green this morning, flat to positive as far as mid-cap and small-cap is concerned. Mid-cap index up nearly 0.2%, while the small-cap index is up nearly 0.4% this morning. And the other piece of red that's actually good news this morning is the India Volatility Index, or India VIX, which is down over 0.5%, nearly 1%, 0.74% to be precise. So the India Volatility Index down, Nifty Sensex flat to negative, mid-cap and small-cap continuing their upward trajectory in the green even at the open. We will be keeping our eyes on the broader indices, but let's also quickly check out how the global markets have been faring over the last 12 to 24 hours. There you go. S&P, Dow, Nasdaq, all in Wall Street in the green. S&P up 0.5% at close nearly, and the Dow as well, while the Nasdaq was up 0.7%. Bear in mind, Wall Street scaled fresh 2023 year highs at close last night and on Tuesday night, and there you go. That's why you're seeing all of the major indices on Wall Street up in the green, and they are keeping their eye out for the US Fed's decision / commentary / way forward projections on the possible rate cuts and when could it happen. But bear in mind, US's inflation is also ticking up, so it looks like there could be no possible rate cut in the near term, but we'll have to wait. Stock 600 in Europe in the red at close. That's how global markets have been faring. We have Kush Bora, founder kushbora.com, now joining us this morning on this edition of First Take. Kush, as always, pleasure, joy speaking to you first thing in the morning. Help us understand this. India's inflation is at a 3-month high. So the US inflation continues to tick up. US markets, for some reason, are on a fresh 2023 year high despite inflation ticking up. And Indian markets this morning have opened flat to negative.
Hi, first up, always a pleasure to be here. I love the energy. What's happening in the markets is something that we've been maintaining for the last 3 to 5 sessions, even at the risk of being, or at least appearing slightly wrong, because the markets, we kept saying that the markets will actually slide, and we'll see perhaps a 3 to 500 kind of a dip from a 21,000 levels on the indices, but the market just held on. In a way, glad to see the markets dip a little. And let me just maintain that, this is not me being bearish. This is me just trying to provide a good entry point, to your viewers. So, the indices were overheated, they were overstretched. I'm glad that they are coming off, because this will give a good entry point, on the indices, on the stocks, to a lot of your viewers and the traders. I think there is still some downside left, maybe about 20,600 on the Nifty and 46,600 on the Bank Nifty is a good, entry point. From there on, perhaps let's just hope that, the Santa knows that, we've been nice and not naughty. So 21,000 is already scaled. Perhaps the second Santa rally might come in and, take us to 21,400 level on the Nifty and 48,000 on the bank Nifty. So this is my Christmas wish. Dip and then perhaps fresh highs.
Okay, okay. The question I wanted to ask is, you have the IIP growth at a 16-month high in India, which is fantastic. But inflation continues to tick up. It's at a 3-month high. It's bordering close to that 6% mark, which is the end of our comfort level as far as inflation is concerned. We saw Dalal Street close in the red again yesterday, and we thought that was a matter of profit booking after the run-up. So are we in a bit of a profit booking season? Because the kind of run-up that we've seen in the month of December, especially post the state elections, and that kind of a run-up on the back of a 6-month bull run, 6-month plus bull run. 6 months ago, even 3 months ago, if you ask any analyst, they'll say, expect a dip around December. Expected dip around this time. And then came the state election results, and what dip? We just went further high up. How is a retail investor supposed to read the cues that that's coming from the markets? Is the markets not reacting to the 16-month IIP data at all?
Let me try and sound modest. What analysts have you been speaking to? Because we've maintained that this market is on the way up. I'll tell you a very simple reason. We know that October late this market made a low, and ever since then we've been on a upward trajectory. Let's not forget that is despite any kind of participation, or rather aggressive selling from the FIIs. So FIIs have only just come back after the state election results, haven't they? So I think once that starts to happen, this will just confirm the theory that FIIs not only create momentum, they also perhaps chase it a little bit, and hence we've seen these overbought levels on the indices. I don't think we are done and dusted here. I think there's a long way to go on the Indian indices, even in December perhaps. But as I said, after a pullback. Now, inflation, I am not too worried about, because you see what's happening around the crude, right? Despite the OPEC, members coming out and putting out statements, that they'll be cutting the supply and everything, the crude prices still continue to, slip. And while that happens, I think in the coming weeks and coming months, the inflation here also will cool off to that extent. So I don't think, inflation just yet is too big a worry. IIP coming in good, that's a very healthy sign. So on the whole, I think we're on a strong footing. My conviction is also placed from the fact that, as I just said, FIIs are coming back and starting to chase momentum rather than create it. So on the whole, we are on a strong footing. I will use every dip as a buying opportunity.
Okay. Every dip is a buying opportunity. Kush, if I can ask you a couple of stocks and news this morning. We'll begin with SpiceJet. SpiceJet, you saw what happened with the results. It posted losses, but the losses have reduced considerably as compared to the previous time period. SpiceJet board has approved the issue of equity shares worth over 2,200 crore rupees, and it's going to issue shares and warrants through private placement basis. You saw the SpiceJet stock yesterday rising up by over 15% in intraday trading. As far as financial results for Q2 FY24 is concerned, losses have narrowed to just 449 crore rupees as compared to Q2 FY23, when the losses were around 835 crore rupees. That's nearly halving the losses as far as SpiceJet is concerned. Kush, Dalal Street investors, traders, all of them, retail investors, all of them excited about the SpiceJet stock suddenly.
Well, let me first give you the technical levels on this, and share my view. The kind of formation that we are seeing, it's a typical classic rounding bottom formation coming to an end here. So the stock could very well move to 66 levels as the first target, and then perhaps 75 as the second target. And the stop loss is very neatly, very cleanly placed at about 51, 50 odd levels. So those are the levels from a technical standpoint. Now, what my view on the stock is that, sure, I mean, once bitten, twice shy. We've seen, a lot of restructuring attempts happen, and perhaps this is the time when it actually does, turn around, and hence the level. So if anyone does want to play this, believe the story, then for the given levels you can enter the stock. My suggestion would be buy a very limited quantity. If you want to get into a cleaner story, then why not get into an Indigo? The stocks actually run up quite a bit. The crude beneficiary, angle also playing out. So on dips, it's a much cleaner story, line share, when it comes to the market share. So for me, that is a stock that I would rather, focus on. But okay. SpiceJet, for all the factors that you mentioned, small quantity, and for the given levels, for an aggressive trader, why not?
Okay, aggressive trader too in small quantities, so retail investors better watch out. Another story, another stock that's in news is also Hindalco, because there you go, Hindalco has gone ahead and plunged into the electric vehicle manufacturing space. It's setting up a battery foil manufacturing unit in the state of Odisha, and it will produce 25,000 tons of aluminium foils used for EV batteries. It's an 800 crore rupee plant that we're talking about over here, and it will be operational in 2025 July. And on the back of that news, the Hindalco stock hit a 52-week high and was up 2.5%. How do you see the Hindalco stock going forward? And also your own thoughts on this investment, which is like forward integration, if I may, from what they make.
It's quite brilliant, actually. Making all the right noises, ticking all the right boxes. The space is where everyone wants to be right now. Battery, EV. The entire space is the happening space right now. So why not? I mean, let's see how it plays out, and how does finally how do investors get rewarded on this? But they're making all the right noises. Now, even if I take that fact aside, the entire metal space has been doing well, right? So you take names like JSW Steel, Jindal Steel and Power, which was one of our calls in our advisory platform. So all of them have been doing rather well.
Kush, even they are invested in the EV space. Even they have ambitions. The Jindal Group has ambitions for the EV space. They're all about making MG an EV brand, so to speak.
And you see, in fact, that was the key moment. That was the pivotal moment where we saw the turnaround happen on those stocks as well. And hence I said, even Hindalco with that, with these recent updates is, ticking all the right boxes and making all the right noises, right? On the whole, the stock has been on an uptrend, will continue to remain so given the current setup. Volumes have seen a slight tapering off. A bit of an uptick would have been more encouraging, but nothing to suggest that the stock will halt its rally here. For me, the near-term levels that I'm looking at are 565. Once that is taken out, perhaps 600 is the next level that the stock can look into. So from a positional perspective, hold on to this one. 495 is a good support zone. Even for a fresh entry, this is a good time for a retail trader. Stock had made a high of 650 about a year and a half back. So pretty much in sight, pretty much in play from a position perspective.
Okay, hold on to that one if you already have it in your portfolio. If not, it's still a good time to have it in your portfolio, or as far as Hindalco is concerned. Any of the stocks that are catching your eye this morning, Kush?
A couple of names. The entire railway space is doing rather well. So I think this is one name that can still be added to your portfolio. So one of the stocks that we've recommended to our clients in our advisory is Tech Rail. A good up move, a strong rebound after a dip as well. So a classic rounding bottom a formation coming to an end. So I think from here on, 161, 164 will be the near-term targets. 153 is where I would place my stop loss. One more stock that is now making a very strong comeback is Siemens. We've already seen a bit of a run up from about 3,300 odd levels, right up until 3,900. And it's now the resistance zone of 3,900. Once that is taken out, the stock could head to 4,000 and 4,150 levels. On the downside, your stop loss would be close to 3,750. So Siemens, like a comeback play, and Texrail, on the given railway and the momentum theme are the two stocks that I have on my radar.
All right, so these are the two stocks that you have on your radar. Also it's going to be a big week as far as IPOs are concerned. Kush, tons of IPOs, couple of listings this week. I think 7 IPOs and 2 listings this week. How are you reading the primary market at this stage?
In all honesty, I'm not a big fan of IPO investing, and we've been very vocal about this. I'll give you a very simple reason. If the issue or if the IPO is a fantastic one, you will get perhaps a very little subscription, if at all. And if you do get any kind of allotment, then perhaps the listing gains will perhaps not be as great. So with that logic, we are not too big on IPOs. We prefer to deal in the secondary markets or once the stock is listed. But I know there are a lot of participants invested in this or rather interested in this theme. So yeah, to each his own. We don't really cover IPOs in a great way, in a big way.
All right, so there you go. India Shelter Finance, Muthoot Finance. Those are the IPOs that are opening between December 13th and 15th. And we'll be telling you more about those IPOs this week so that you can figure out whether you're going for it or not. But if you ask Kush, he will say don't. But Kush, I'm afraid we've completely run out of time over here on this edition of First Take. Great having you here. Throw light on how the markets are going about, but we'll let it go at that. Thank you so much for joining us. And with that, we are taking a very short breather here on our broadcast, but we will be back with Business Plus in just a jiffy. Don't go anywhere. Keep it with News9 Live.
The scale of the attack was something that we were surprised at. David Hadley was a double agent. The Americans did not want him to be fully exposed, so all that he probably shared with the Americans was not shared with us in terms of intelligence. If we had that, I'm sure that we would have been able to deal with the situation far better.
This and more streaming on world's first news OTT, News 9 Plus. Download now.